What up, traders? It is Lex. Today is Monday, February 24th, 2020. And you read that headline correctly. I turned a 19-cent option into a $3.39 sell for a whopping 1,684% gain on my overnight swing trade on SPY. I did a put. Now, this is my biggest percentage gain of my career. I've never made percentage gain over 600%. So this was quite a move. I wasn't actually expecting to make a over 1600% gain on this. But the reason why this happened, there was so much volatility in the marketplace, was because of the coronavirus. So basically, if you're not caught up to speed, unless you've been living under a rock, the markets have been risk off due to a outbreak from China for the Wuhan or the coronavirus, whatever you want to call it. It's been kind of shaking markets up the past 3 weeks. And over the weekend, as cases and deaths increased and it was spreading into multiple different countries, South Korea, Italy, Iran, more deaths have been reported, more contractions have been reported, and it's really starting to freak out the markets and a lot of investors. And it appeared in the markets today when the markets literally crashed. The Dow fell more than 1,000 points. The S&P 500, the ES future minis dropped over 120 points. NASDAQ over 150 points. Large cap stocks sold off. FANG stocks, everything just sold off today, big time. And I was ahead of the game going into the market Friday. It was kind of predicting this sell-off for two reasons. One, which I just explained, the coronavirus, but also because the market's been at all-time highs trading, 4 days ago. So the market was definitely looking for a pullback, and the coronavirus and the outbreaks and the spreading of the virus really was the catalyst that really made it fall dramatically over the weekend. So going into last week, I was just kind of sitting in my hands waiting. Because if you look, from a technical point of view, it's, this really wasn't rocket science. If you really look at this chart of the SPY, and I'll go over a couple time frames, but the daily chart, it's way overextended, hitting all-time highs while the coronavirus was breaking out. And if you look here at the TD sequential, which is one of my key indicators, we were trading at a 9 last Monday, or 2 Fridays ago. So basically 6 trading days ago. And I was waiting for, a couple red closes. And when I got that 2 below the red 1, below the green 9 on the sequential, that was like my like light bulb would be like, you know what, this market's definitely going down. It's a Friday, the outbreak's happening. I'm going to short the SPY, and I'm going to go a little out of the money so I can have a very cheap put, less risk, high yield. And along with the TD sequential, we're also below, it closed Friday below the anchored VWAP for February, the month of February. And I'm like, this is going to close below the month of February anchored VWAP, also below the 8-day moving average, and below the 20-day moving average, and below the 50-day moving average. So it was just, just red flags going off. The market's going to go down over the weekend. So I took the put, the SPY put. Now let's take a look at this. I got this towards, the last hour of trading on Friday, right here. This was around 2:20. It's a little about an hour and a half, 90 minutes before market close. At 2:20 p.m., I went out very far and bought a 326 put expiring today, Monday. Now, the SPY was trading at 333.25 when I took this put. So I went way out of the money, about 6 points. I didn't expect it to go down through my strike price, which was 326. I was just expecting it to maybe go down 4 or 5 points on today into the open, maybe like down to 328. Everybody would panic sell, and options premiums would spike up high. But it actually, in pre-market trading, it fell way lower than the 326 strike price 2 hours before market open, it was trading below the 326 strike price at 324. So I knew at market open I was already going to be actually in the money on my strike price. So I was like, this is great. I'm going to sell this right at market open because my SPY put was expiring today. So I didn't have any time to like hold it, because it's going to expire and the premium is going to go jacked up if it goes past the 326, if it did go long and buyers came in. So I sold it literally the first minute of market open, right at 9:31 a.m. I sold it right here, which was close to the low of the day, pretty much all the way until about the afternoon, 1 p.m. where it actually dipped below the low of the day. So when I sold this at 9:31 a.m., I actually put a limit order sell for 250, which would have been just about a 700% gain, because I bought this at 19 cents. This option premium was selling for 19 cents, and it actually got filled at 339, so well over the limit price, because it crashed so hard. People were, stop losses were going out, people were panicking to get out, and market makers obviously want to make as much money as they can, so they jacked my limit order up to 339, and I actually got it filled at 339. So it was a pretty epic percentage gain, and I actually get this timestamped on my Twitter, so you can take a look at it. This is when I went on Twitter and timestamped it this morning. So here's my buy price at 19 cents. This is on Friday at 2:21 p.m. and over here is my sell at today at 9:30 a.m. for $3.39. So that is a 1,684% gain for a $320 profit. Not a lot of money, but there was no risk. I've risked $19 and I made $320 in an overnight trade. That's like literally less than 24 hours if it wasn't over the weekend, obviously. So I'm just, the only thing I'm really upset about is I just wish I maybe would have bought maybe 5 of those contracts. But it was kind of thinking like a lotto put with very little risk and high yield. And so I did get lucky that it actually went plowed through the strike price of 326, and it actually, when I sold it, it was trading around $323 on the SPY spot. So it was a pretty epic trade. So I was happy with that, taking profits, huge gain, very little money down, and I also was shorting Tesla on Friday as well. If you take a look at that, for the same reasons, coronavirus, and how they have factories in China and it's going to slow down production in some of their facilities, just like any other company trading that has a footprint across the globe. And I shorted Tesla on Friday early in the day, just because that's also been trending at all-time highs and kind of way overpriced and way overbought. And I was just buying that just because it was just way overvalued at this point. Not so much because of the coronavirus, but that was also a catalyst. So I did take a short on that, and I covered that this morning, the same time at 9:31 a.m. And I got another 118% gain. That was $190. So on the day, it was a $520 day, which was pretty good for 2 overnight trades. Here's my Tesla trade as well. My price was $160, and then I sold it for $3.50, which is $350. So it was $191 profit. So overall, it was a great day. 2 solid trades. The market, because of such a drastic drop, I think maybe we'll have a rebound tomorrow, Tuesday, turn around Tuesday, maybe at 10:15. But there is a lot of risk off. Gold spiking. A lot of stocks are selling off. They've been on all-time highs. It's very difficult to be a buyer here on any of these tickers, but it did drop considerably. Most stocks dropped more between 5 and 10%. So for long-term investors, there's probably a lot of people dipping their toes and trying to buy stocks because they are down 5 to 10%. I'm not going to be doing that. I'm a day trader, swing trader, so I look for short-term trades. Much like the 2 I covered today. So anyway, that's the video today. Hope you enjoyed it. Leave a comment or a reply. Make sure you hit the like button, and I'll see everyone soon. Take care.